Hello everyone on this channel. Today in second video on this channel, I'd like to share my performance, my understanding, my experience about myths, most common myths and misjudgment in investments industries about investors. And first myths tell us there are high-level professionals in investment industry who are capable to understand, who are capable to achieve financial goals, generate huge cash flow, generate excellent level of investment performance. It's absolute myth because high-level professional in investment institutional generate cash flow in different way from small investors, from especially investors beginners. All professional investors, all professionals in investment institutions, investment banks, brokerage firms, or other institutions in investment industry generate three sources of revenue. First source is a commissions fee. Second is a marketing fee for promotion stocks, for promotion businesses on stocks. And third source, third source generate cash flow for institution from services fee. There are many services in investment institutions which is capable to generate huge capital for investment institutions. It's very important to understand for small investors and especially beginners investors. Especially beginners investors have one source of generating cash flow, one way, only their investment performance. Myth number 2 tells us that for achieving financial goals, for achieving excellent investment performance, especially investors, small investors, must have very huge capital. It's absolute stuff, absolute nonsense, because even Warren Buffett, the famous investors, in 1946 create his partnership, investment partnership, and share his knowledge and his performance and create business partnership, investment partnership from owing $100. $100. That's why small investors, beginners investors, can develop his knowledge, can develop his most important skills, and can generate excellent investments performance. The most important, you need passion to investments and develop constantly skills to becoming of successful investment. Myth number 3, misjudgment third, tell us that only short-term game like trading, it's a most successful way to generate cash from stock markets and from other sources of investments. It's a reality. All investment institutions want to try access to your mindset, access and try focus your attention for this short-term game. This short-term game, it's not same like investment. It's trading. It's short-term game like casino. But only this casino is a global casino. There is casino, local casino in Las Vegas, in Monte Carlo. In the global casino, it's a trading short-term game, and practically all investors, all institutions, brokerage firms are engaged in this short-term game and want to try access your attention, your capital to this game, because main task, main goal, this institutional generate huge volume on trading. You need to understand that successful investor is always long-term horizon. It's not trading. It's not same like trading. Myth number 4 tell us that practically all investments industry, all investment institutions on Wall Street and around the world are investors, are investment activities. It's absolutely nonsense. In reality, the most important part of institutional investors, investment banking, investments brokerage firm, investment services firm. It's very many firms. These institutions in the investment industry are engaged in short-term trading activity. Short-term trading activity. Every day they buy and sell securities, buy and sell assets, buy and sell stocks every day. First of all, they are focused on price, movement price in short-term horizon. You need to understand that successful investment, it's invest your money, invest your capital in real productive asset classes like realty estate, like real business. It's productive assets, huge cash flows in the future. When you buy shares or stocks on stock market, you buy real business. You buy share of this business. You buy cash flows. You buy profits from this business. And you invest your capital now and buy cash flows from future. It's a real important thing, and this model attention, this model of behavior investors discover Benjamin Graham in 1930s. It's a real important moment in investments. You invest in real business. Myth number 4, it's tell us educational program for professional investors are focused on real misconceptions. Misconceptions number 1 is a modern portfolio theory. Misconception number 2, efficiency of stock markets. These conceptions, only 2 conceptions, absolutely wrong. Because modern portfolio theory engaging in such investigation on stock market by professors, academics, and these academics and professors figure out diversification of risks. If you want to minimize risk, you need more diversification. And even in this portfolio, modern theory portfolio, engage situation where portfolio consists of tens or even hundreds stocks. It's real stuff and real nonsense, because all you need to understand, all professional successful investors have concentrated approach to portfolio, concentrated from 5 to 15 stocks in portfolios. Warren Buffett have many times no more 5 stocks in your portfolios. His colleague Charlie Munger has 1 stocks in your portfolio, many for one time, for one term. These stocks, American Retail, US, Costco. You need to understand, not diversification, concentrated portfolio if you want to develop a real successful investment performance. It's very important. Second misjudgment from modern portfolio theory is the attention to risks. Modern portfolio theories figure out and review information about risk as standard deviation of price fluctuations on stock markets. It's absolutely stuff, absolutely junk, because all famous investors, all successful investors absolutely understand that risks, it's real risk of engaged in business, a risk for business. It's very important to understand. Charlie Munger tells us about risks, review information about risk as probability of losing capital, or a probability not achieving desired level of return on invested capital. It's important to understand these conceptions. There are many other misconceptions, misjudgment about investment industry, about investors, and today I review most common misjudgment, most common myths about investments and investors. Diversification is absolutely nonsense. Risks and volatility, absolutely nonsense, because volatility is not risk, volatility is your friend. Volatility on the market, it's the best time to buy or to sell shares. If you stock down and volatility is up, you have beautiful moment of time to buy more undervalued shares. If you stock an up and volatility is up too, you may create and fix beautiful investment performance from selling your shares, from selling your stocks on overvalued price level. It's very important to understand for small investors and investor beginners especially. Volatility is your friend, it's your opportunity. It's your opportunity to create beautiful portfolio. It's not risk. If you want to know more this misjudgment, if you know to understand and create this beautiful investment mindset, right mindset for successful investors, share this video to your friends, stay with me on this channel, and next week we can create and I discover interesting moment, three pillars in investment industry, main three pillars in successful investments. Stay with me, share this video, like this video, write comments. It's very interesting to read these comments.